So when you take a look at, say, where the money flow has been when you're looking for alternative assets, looking for yield, where's that conversation now in the real estate market?
Well, it's coming into real estate because obviously the yields are still, in a relative basis, higher than, going negative in putting your money in Germany or, in European banks. So we're still seeing flows coming in, and we're seeing the New York City market very vibrant and strong in terms of leases, and I think that then drives people wanting to invest in New York City. It's almost like a safe haven.
Where has the money changed, either in terms of the buyers, or you've seen more flows from here, less from here? What have you noticed?
Well, we've obviously seen less, Chinese money come in. I think it's more domestic and pension funds. There's still a lot of private equity money floating out there looking to buy real estate. So, when somebody steps out of the market, somebody else steps in, and there's still tremendous amount of monies flowing into real estate, again, because of the relative yield.
So something that struck me was when we got the headline earlier that Bloomberg reported that we may see a limit of U.S. capital inflows into China U.S. pension funds. I think how can China retaliate? That seems to me maybe they stop investing in things like real estate. Does that happen? I mean, is there a straight line here?
I think it's already happened. I mean, the Chinese have, they were typically the buyers of a lot of condos and, bank lending. That's really, slowed down, I would say, over the last 18 months significantly. So I'm not sure if it can get any worse. Probably it could, but who knows?
So, Sarah, in your world, the search for yield, where's your favorite search for yield place?
Well, I was just looking at some of the dividend yields of a bunch of different things, including some of the energy stocks that we were talking about earlier. But what's interesting to me about the REITs is that there was this whole concern a few years ago that there was going to be there had to be a refinancing and rates were going to go higher and it was going to be a problem for where all the valuations were. Now that we're back to lower rates, does this just make them, to me it sounds like that makes them even more investable at the moment. And I think that people are, those are the places that people are going.
The REITs definitely have, as the rates have come down over the last 6 months or so, have been a very good place for people to find yield and invest in, if they want to get into the real estate, space. That's a very good way to invest. And as I said before, the fundamentals, particularly in New York, are very, very strong. We had 35 million square feet of leases signed year to date through the third quarter, up from 29 million last year. So, and it's a broad range. It's the FANGs, it's Ubers, it's the Amazons, it's Google. They have 6.5 million feet of space, and small companies, everything in between. And so, in terms of New York, we're seeing a very vibrant, strong market. People want to be here. Young people want to come here. We have great educational institutions, NYU, Cornell Tech across the river, Columbia, and the engineers are here, and that's where the companies are following them because they want to have the best and the brightest. So
how much of that leasing is WeWork?
Well, I'm glad you asked that question. The last couple of weeks, everybody's been talking about WeWork and the market. It's 1% of the market. We have a 550 million square foot market in New York, in Manhattan, and WeWork has about 7 million feet. So it's about 1%. The total co-working or flex space is about 15 million or 3%. So it's a very small part of the marketplace, but it's an important part of the marketplace. It allows entry of small companies to come into lease space with less brain damage, but even large companies are taking space. So I think we have to put all this in perspective, and the co-working is here to stay. Other companies are going to fill in the void that in terms of WeWork, if they're slowing down their growth. Even real estate companies, competitors of mine, Tishman Speyer, Hines, Durst, are getting into the co-working flex space because it's important. Our customers want that type of flexibility. We're just opening a building in Brooklyn with WeWork as the major tenant at Dock 72 at the Brooklyn Navy Yard. They've taken about 30% of the building. We just opened last week. They are filling up that space. The building's fully amenitized, and that's what companies are looking for. Open space, food halls, wellness centers, conference centers. And so that's the trend of where companies want to take space, and the owners are providing that type of alternatives.
So no doubt that idea of the flexible workspace is taking hold, specifically with WeWork, and you were also an early investor. If you look at this chart on the terminal, it's the bonds trading 83 cents on the dollar. So obviously the conversation is, can they renew their leases? Are they going to pull back on their leases? Would you offer them the same terms that you would next time around? What do you say to that?
Well, I think, first of all, Art Minson and Sebastian Gunningham, who've taken over as CEOs, they're very smart young men who I think are going to right-size the company, create a plan, and move them forward. I think they have to rebuild confidence in their, with their customers, landlords like ourselves, their investors. But I think they have the ability to do that. And
what's the number one way they can do that for you?
Well, I think come up with a plan and implement that plan and regain the confidence that they had. The business works. They're at 95% occupancy, with about 40% of that with enterprise companies. So, if they turn the lights out tomorrow, there's still people in those spaces. So that's not going to, I don't think that's going to happen. And I think they have to, build that confidence back, stay to their core mission of providing flexible workspace, which they've done very, very well. And I think they will, regain the confidence in the marketplace. Yeah, things will change. The terms of their leases will change. But I think, again, back to the fundamentals, there is demand for co-working and flex space.